Dollar index still holding support here, right around 107.8 or so. I did get long USD CHF. I took a small buy position. So we'll see if that one can continue to push off of these lows. This is the area that I was watching, right around 90.50, let's call it. Monetary versus fiscal. Yes, monetary policy is interest rates set by the Federal Reserve and their balance sheets, right? And then fiscal policy is President Pump, right? What Trump says, which can cause markets to go crazy one way or the other. In his previous presidency, Trump also made a very regular stab or promotion of certain individual companies, which is probably why you see all the CEOs, jumping to his side now, because, if you guys saw like the entourage of, Zuckerberg and Elon Musk has been pretty clearly that side for a while, but Bezos was in his, corner, all these CEOs kind of taking Trump's side. It's because what they know is Trump in his previous presidency would target and bully companies that weren't kind of in his camp and would promote and help companies that were in his camp. So the point is they want to be buddy with Trump. So I hate to, I honestly would prefer to continue to focus on just the economy and just monetary policy. And that is, of course, what will still make up the bulk majority of what I focus on in this channel. But I'm also going to be challenged. I'm taking on a new challenge of trying to remain as unbalanced, unbiased as possible and report on what's happening. Let's take a look at the news, guys. We've got unemployment claims coming out, 223,000 versus 221, pretty much exactly as expected. Let's see if that moved anything. Nothing really on S&P. Dollar pretty unchanged. Euro pretty unchanged. Yeah, pretty much exactly as expected. Let's take a look at the dollar CAD just because Canadian news is coming out. CAD news, inflation data, retail sales data came in light, causing the CAD to weaken. Dollar CAD is up. Here's a position that I'm in that is going wrong. So I shorted euro pound right here, and it went against me, and I have shorted it a second time, and it's continued to go against me. So both positions are in the red. My average entry level is around 83.92. And I'm continuing to dollar cost average on this currency pair. And we'll see. I would like to add actually more to it. So what would be interesting to me would be if the currency pair continued to move against me, I would add another short position to my existing two positions. I have two very small positions. I'd be willing to add another one if we get up to around 0.86 or so, 85.75, let's call it. So I am not always correct with my trades. Recently, I've had some really good ones, but I absolutely am not always right. There are times where I'm just dead wrong. Another example of not being wrong necessarily, but being off in terms of missing a trade was this oil idea that I had recently. A lot of you guys might have seen me talk about this. I had a buy position pending quite literally like right below where this wick went to, and I missed this move. That move would have been a game changer for me. Recently, I have been on a pretty good win streak, but win streaks don't last forever, and I definitely would not claim to always have trades like the ones that I have right now. I am actually interested in oil, by the way. Oil is also getting a top setup on, let's see.
The Edge Finder is the #1 trading tool for 2025. The Edge Finder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edge Finder. The Edge Finder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edge Finder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edge Finder.
Yeah, it's getting a really strong reading on the Edge Finder. US oil getting a +13 read on the Edge Finder's top setups page. So US oil is one that I'm interested in getting long. but would like to see something like this, a pullback to at least the 50% retracement to the 61.8, somewhere in this area. I would look for possible long setups on oil, as long as the edge finder continues to give me that bullish confirmation alongside the technical setup. The edge finder is what I use to actually systematically look for setups. And then technicals are what I use to kind of enter and exit the market and manage my risk. So I do like the oil setup because we're getting confirmation on the edge finder. Scores look pretty good. And one of the big things I've been talking about a lot with the edge finder recently is this new page that I just finished with my team. The Economic Heatmap, the US Economic Heatmap will show you all of our key indicators that we look at, right? GDP numbers, manufacturing numbers. And I want you to think at home for even the newbie fundamentalists. Think through this with me for a second. Would oil prices likely go up or down if the economies of the world were strengthening? If economies of the world are growing and performing well, would that be a positive thing or a negative thing for the price of oil? Would the demand for oil go up or down in a stronger global economy? Think about it for yourself. Get your answer ready. The answer generally is oil prices would be expected to go up alongside growing demand from strong economies in the world. That makes good sense, right? I think we can all kind of see why that would make sense. If you have strong economies that are growing, they're going to demand more energy. More energy means the price of existing oil should go up. Now, it's not that easy because oil prices are a fickle market, because there's also other factors. We just discussed the demand side for oil, right? So hopefully that clarified the demand side for oil. Strength or weakening economies hit the demand for oil, but there's also the supply side. The supply side factors are things like how much is the US producing? Or, for example, how much are OPEC nations like Saudi Arabia, how much are they producing? And then there's also what kind of geopolitical events are happening in the world. Are things escalating or things declining, right? If there's more war happening, that's usually going to cause the supply to shrink, right? Why would it cause supply to shrink? Because trade might lock up. There might be boycotts. There might be, what's the word I'm looking for? Sanctions, right? Trade gets disrupted. Supply gets disrupted. Existing supply would then become more valuable, can go up. So there's a supply and a demand component when you're studying the prices of oil, okay? So right now, most of our factors within the edge finder, which focus mostly, admittedly, on the demand side, we don't really look too closely at the supply side. The demand side for oil looks pretty good. So it leaves us with this question. What about the supply side? Demand side, what I mean by look at the economic data, strong US economic stuff, right? We got most factors here on our side for a strong US economy into 2025. That should continue to support decent demand for oil. But then we know that Donald Trump wants to produce a ton of oil, right? The Democrats before him produced a ton of oil, and he wants to even go further than that. He wants to continue to produce more and more oil. Whether you agree or disagree with that is your call, but I'll give you my best opinion on it for what it means for the markets. If a ton of supply of oil floods the market, it could cause oil prices to go down. If there is geopolitical resolutions, which we don't know that are going to happen, but if they did happen, oil prices would go down. So there's some negative things here that make me a little bit cautious with oil, but some of those things are not right now, right? We don't know geopolitical stuff is just going to get resolved. So we might take that off the table. There still could be escalations that take place. Even if you like Trump, just because this previous administration was not necessarily very war-torn per se. In fact, it was very not war-torn. Doesn't mean that his second one's going to be completely free of it, right? There's still stuff in the world that just because Trump is president does not mean that stuff just ceases to exist. There's still China, Taiwan, Russia, Ukraine. There's the Middle East. And while Trump may have a say, he doesn't control it, right? So if that stuff escalates, oil prices could pull the surprise move higher. So for me right now, I'm focusing more on what I can see a little bit more clearly, which is the demand side. I think there's strong demand for oil prices because the economy looks pretty solid in the US. And so when I look at this, I say, okay, if this dips, give me a discount on this. I think it's worth the risk to reward to play that upside.
First, I was actually looking for buy setups after this push to the upside. So we were trending to the upside. I didn't get a high probability entry there. So we just kind of retraced too aggressively, in my opinion. And then I also saw another setup to actually sell right here after this big red candle. So for me, it's not about the actual sentiment if we're long or short. It's about the, let's say, the cleanliness of price action and the actual candle formation. So I can pretty much flip between buys and sells pretty quickly. So at this point, yeah, I was looking for a sell setup. We didn't print one, unfortunately. We kind of broke this structure with a wick and retraced. And right now I'm reassessing the whole picture. I am looking at mostly the Japanese pairs, to be honest, because the dollar pairs seem still a bit flat, still a bit corrective. But the JPY pairs are actually moving and actually producing some clean price action. So if I had to pick, it would probably be the euro and the Japanese yen, where we had this okay uptrend. Now we're pausing a little bit, so I'm seeing what will develop on EJ. Other than that, I don't have like a super clean, super no-brainer setup for today.
Okay, yeah, fair enough. Yeah, those yen pairs looking kind of interesting. A little bit of downside movement across dollar yen. Look at CAD yen too, also kind of flush to the downside here this morning. CAD retail sales came in a little bit light, so we'll see if that has some follow through, maybe drag some more downside here. Miko, same question to you. You have any favorite chart right now?
Yeah, I probably would say it has to be a gold at the moment. Really nice breakout past couple days, and it has broken out that 2720 level of resistance. So for me, it looks like gold's next big level is the all-time high at 2790. So I'm actually currently looking for long opportunities on the retest of that area. We're seeing a bit of a dip right now for gold, so hopefully maybe tomorrow maybe might be testing that level. If not, maybe early next week. But it looks like we are getting that pullback, because I was kind of scared if gold will kind of just fly to the moon without the pullback, but it looks like we are getting one. So if price can come back, retest that level, I get my necessary confirmations. Hopefully I can get some longs and trade it at least back to the high there, which is around 2790, but maybe further as well, maybe 2800 just above us. But yeah, I would have to say gold's probably my favorite chart at the moment. Numerous high lows in the 4 hour. Looks like momentum is back. As long as we don't break back underneath, yeah, I'm very bullish and looking for a push back to the highs.
Yeah, I was going to say, I think that's probably, at least on the daily chart, one of the cleaner setups that I can see out there right now. You've got really clear breakout. We discussed this, I think, last week, this 2720 level, big, clear, obvious level of resistance. And getting the breakout here was a good sign that maybe we see some continuation. We followed through for a day, may now be pulling back. So we'll see if you get that entry, but that looks really solid. And again, I would also agree. I think it's most likely headed to test those highs. Usually that's what happens when it starts creeping back up. You put in these higher lows. It's very likely to want to go test those all-time highs. Mm-hmm. Seems like we're pretty close to it, so I would not be surprised if we get there. The question is, will we get that pullback to give you and probably a lot of other bulls the opportunity to potentially get in on that dip? So I guess we'll have to see, but we'll continue to watch gold for sure. Next one, the dollar index. Marco, what are your thoughts? Dollar index right now. Is this, and I know you look at the 1 hour chart, so I'm very curious your thoughts on the 1 hour chart. Is there momentum here? There was for a while. Is it dried up? Are we sideways? What are your thoughts on the dollar?
Yeah, so for the DXY, the 1 hour chart does look a bit bearish right here. But again, when I'm looking at the DXY, I am focusing on the daily chart actually, because it gives me a bit of a better picture.
Okay.
So we have to understand the fundamentals as well. We were crushing to the upside. The dollar has been gaining a lot of strength, but now that Trump is in office, maybe the script has flipped a bit, because he's going to want a weaker dollar. He's going to want lower interest rates as well, meaning a dovish Fed. So we may actually see a flip right here where we start this downtrend on the actual DXY in 2025, which will be pretty interesting. Right now, am I seeing any evidence of that? Well, I see a big red candle on the daily, but it's not enough for me to be a bear. Usually I want to see like 2 big red candles, and then that's a pretty good sign that we have flipped to a bearish market. So I think there's still some time. We need to have the Fed meeting next week on Wednesday. We will see what Powell is thinking about. So then if we let some weeks pass by, maybe a month or two, we may see a dollar start losing strength. In terms of like the bigger picture, if I zoom out a little bit, switch to the weekly, there is some free area right here. So this major high has still a long ways to go. We have broken out of this major level of resistance, and we're kind of, you could say, struggling a little bit on the top right here. So yeah, I mean, the technicals are looking a bit not as bullish as they were, and I would say the fundamentals are definitely switching from to a bearish side for the dollar, I would say. So we kind of have the technicals and fundamentals on these bigger time frames going to the downside for the dollar.
Yeah, fair enough. And also, just to follow up question on you, Marco, there. So dollar index were to flip bearish. Do you have a specific currency pair in mind that you would be most interested in trading, like maybe against the dollar?
Yeah, so for me, I always love the euro and the US dollar. So that will for sure be my pick. We have been crushing lower ever since, I think it was September. And now we're slowing down a little bit. I can definitely see a slowdown on the bottom. Still not a definite flip to the uptrend, but I do like this. And if we do flip to a more bullish stance, I will definitely be looking for buy setups on the euro and the US dollar. One of my favorite pairs. The spreads are always great, and it's just a very popular currency out there. So that's going to be my pick.
When I kind of look at trading costs, I kind of give myself, so for example, for every trade I take, I risk 1R. And then out of that trade, I would say 0.1R will be a cost to trade, whether it's the commissions and the swap adding up. Of course, it doesn't necessarily that all the time. Sometimes I'm paying a lot more, depending like on the pound yen position I had a few weeks back. I was holding that short for quite a while. That was definitely a lot more than 0.1. But on average, it's kind of around a 0.1 per trade. So if I take 100 trades, about 10R is just going to go to fees and costs. So whatever your profits are, you need to subtract that from your profits, and that's kind of what you'd be looking at on average in general. But of course, it depends whether you're swing or lower time frames. For me, is about 0.1 I look at. But in terms of the dollar, I am still bullish, but it's looking a little bit less attractive. Marco mentioned it's a bit more corrective, and that is definitely true. For me, still above the key level at 107, and that's kind of what keeping me bullish. Excuse my phone there. That's what's keeping me bullish at this moment in time. So as long as price stays above 107, I'm looking for a push back to the high. The moment we do break underneath that, I will scrap that bias. I'll be looking at this as more of a fake out, and could be looking at a really big move to the downside for the dollar, because essentially we've been ranging for about 2 years. So if we're not going to break out of the range, that means this is a fake out and we're going to remain inside it. And then I'll be expecting some follow through in the opposite direction and a push back down to the lows here. But at the moment in time, we're still above that. So I am looking for opportunities for the dollar to bounce. There is some support we're trading at right now. Not necessarily looking at the best price action, but potentially if we come back to this area and react, there could be some nice buys. I'm actually looking at pound USD at the moment for some shorts. We've come back into a nice low here. So should I see price come back, retest that area and give me my entry signal, I'll be looking to short it back to the lows here. If we start breaking through, there is another level I'm looking at 1.25, but If the dollar's not looking as good, I'll probably stay on the sidelines. But yeah, that's kind of my take on the USD for now.
We do have the Bank of Japan rate decision coming tonight or early in the morning, depends where you are. They're expected to hike rates, but to be honest, I was having a discussion with one of my guys this morning. We had some of our members that were trying to trade the yen, and they were confused because they were long. I saw quite a lot of people in these streams as well buying yen pair, selling yen pairs, buying the yen off this pullback. And the problem is I don't understand why. So although, you know, I don't know why, because we've got the high, lower high, lower high. Structure hasn't broken. We're still trending to the downside in terms of price action. We do have a potential rate hike. It's very likely we're going to get a rate hike. But the issue is, does it matter? In my view, no. Although it's a slightly positive thing for the yen, it's not something that really changes much. In terms of if we compare the yen to the dollar or the yen to the pound, we compare the economies and how they're doing, it's still far behind. So yes, we might have some short-term bullish moves on the yen like we've seen. But in terms of swing trading, obviously I'm not talking about scalping here because you can catch trades either way, scalping really. But for swing trades, going long on the yen, to me doesn't really make sense yet. You could argue we could try and trade the intervention at sort of the 160 to 165 level. Although, you know, I've been saying I'm not really in favor of that because it's very difficult to time. It could go to 160, could go to 165, could go to 170 before we actually see any action. So, you know, you could be essentially selling a rocket and buying a falling knife either way. So that's my breakdown on the yen. It's not something I'm overly interested in trading. I understand that certain people see certain things and look at it different ways, but yeah, in my view, there's not enough substance really to start going long on the yen. Quite today, I got a couple of probe trades open, but nothing major. And Andy Wisa. James, hope you're having a good day. Market's moving good this week, especially DAX. Good stuff. Let's have a look at the DAX. I've not really paid much attention to it, actually. So actually, we've broken out this channel that we were having a look at. So previously, I was looking to go short. Well, I was looking at shorts. I wasn't going to go short. But luckily, you know, I didn't. But yeah, it seems to be on a really nice rally. Actually, I don't really see any real negatives. I mean, I'm not really a fan of the Eurozone in general. But yeah, I would obviously lean more towards going long on the DAX compared to going short. Trend is your friend, remember? Silver, yeah, I saw someone else talking about silver as well, saying it's fallen off a cliff. I wouldn't really describe it like that, but yeah, we've had some nice downside here on silver. Let's just see. I'm not sure if I'd be willing to buy where it is actually at the moment. The level doesn't look too bad. We've had previous supports sort of through here. Roughly, it's not super strong, but there is something at least. But yeah, to be honest, I prefer it to come down towards the sort of $29 level. Then I might be interested. We've got more of a significant structure back down here. Until then, I'm not really very interested. But you could also argue that we are in an uptrend here. So I think going long off here probably isn't a bad idea if you're willing to take that risk. I'm not, just because I'm not super happy with it. But I would understand if someone was. We've also got the dollar not looking the best today. We did form our upside wick this morning, so chances are we're going to continue to the downside just on a price action view or a candle view here. We also had relatively negative news today with the jobless claims, so that will be relatively supportive for silver. Ball out, not that many anymore. Basically just dollar crosses. So euro dollar, pound dollar. Yeah, that's all I've been paying attention to. I've also got a few trades on here. So I've got euro pound shorts, dollar Swiss longs, and euro dollar shorts as well. But yeah, actively it's just euro dollar these days. So let's see. I know the indices are doing very well. Unfortunately, not in any of them, which is a little bit sad. Would have liked to have been. So I remember we were looking at this downwards sort of channel that we were in. I was just not super happy to buy into this when, you know, maybe I should have done, maybe I should have just taken that leap. But, you know, better safe than sorry. But in this case, I'm feeling pretty sorry. So if you're not day trading, what are you doing when trades are just running? I'm working for that. So obviously I run Elite Traders. That takes a lot of time, talking to members, webinars. I also stream on my own channel. I also run the free Telegram group. So always doing something. I've got a small side business as well that requires a bit of work now and again. Ward Peters, yes. So euro dollar I'm fundamentally still bearish on. We've had some news, you know, the past data releases aren't quite as supportive for the dollar as they previously were when we saw this huge rally to the upside. We're having a slight unwind of the Trump rally as well, in my view. We're also, as far as I can see, we're pricing in an extra rate cut this year as well by the Fed. So we do have a couple of negative things for the dollar, adding on some pressure. But if we still compare the US economics to the Euro economics or the Eurozone data, it still is a lot more positive. So that's why I'm happy to stay in short side dollar cost average, which is why I don't really care too much. If we have some more upside, I'll scale in. If we have downside, that's great. So I'm happy to sit through a little bit of uncertainty in the markets. We've also got the tariffs as well. That's causing some uncertainties, causing an outflow of the dollar at the moment. But we do have the Trump speech tonight, so that will be, hopefully, it will shine some light. It would be lovely if Trump came out and said he was going to put huge tariffs on euro or on the Eurozone. That would be a fantastic thing to hear for my trades, but we'll see if that happens. Yes, euro dollar, I'm still looking for parity. I actually have a document I was going to show you here. Give me 1 second. So I showed 2 yesterday, and another one came in yesterday night. So let me just zoom out a little bit here. Here we go. So this is by BNP. I don't really pay attention to BNP, but I'll have a look if there's something interesting. So they're still looking for dollar bullishness. This does rely on the Fed not cutting this year, which, to be honest, I'm fairly sure they will. They're also looking for, or tariffs are not fully priced into the markets, which I don't think they are, to be honest, because when, you know, there's uncertainty around tariffs and what Trump actually wants to do and actually what he will do. But their target still on euro dollar here is at 1.0, which is parity. So that's good. They're also looking at, obviously, euro shorts as well. So it's a nice little confluence to the trade. Pound Australian 1 month outlook. Let's see. The problem is with Pound Australian, I'm not really bullish on either of the currencies. I'm actually more bearish. So there's problems within the UK economy, specifically the debt that the UK government is in, and obviously the sort of payback on that, if you will. So we really need to see what the Bank of England is going to do. If they end up cutting rates, it will likely be quite positive for the pound, actually, bringing those interest rates down, meaning it's a bit easier for the government to pay off what they owe. It would also likely mean that the public taxes won't be going up and public spending hopefully won't be cut, because that would be detrimental if that started happening. So yeah, pound I'm not super bullish on at the moment. I'm actually more bearish. Australian dollar's also taking a hit because of the Chinese data. If any of you guys know, I actually got it from Anton Creel. I'm hoping you guys know who that is, because he's a pivotal person in the trading world. He put out a tweet the other day saying that a lot of the Chinese data is fudged. and I'm not sure how true it is. I don't really look into the Chinese data too much. I'm not going to show it because there's some racism in it. I don't want to get this channel in trouble. But he says what's happening in China is way worse than reported. Economy is probably down around 20% since 2019, but they of course keep lying and reporting growth. So, you know, again, it's not my research. I'm not 100% sure, but he is quite a reliable guy, so we'll see. So, point is, not really looking either way on this market. To be honest, I would look more towards the downside just because this is where the established trend is already going. But yeah, from a macro perspective or from a fundamental outlook, for me, there's just nothing there. GU is also a good long-term buy. You know what, Ballout? I actually don't disagree. So the thing is with a lot of the dollar crosses is the steam is going to go eventually. It might take a while, you know, euro dollar. I'm just going to use euro dollar as an example because it's what I'm looking at. We might come down and see parity. We might even come down and see a little bit lower, but eventually we are going to see a comeback. That's sort of just natural for currencies and economies. That's kind of how they work generally. Unless things really start going bad, you can end up like Venezuela, but you get what I'm saying. So, you know, if you're happy to sit through some drawdown, potentially, a long-term buy probably isn't the worst idea.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.